reason why this chart is a great chart for new traders or even experienced traders, it don't matter how long you've been trading, you'll benefit from it because it does that labor for you. And so with the wolf chart, what you had the opportunity to do is to focus on finding and hunting for trade setups and trade opportunities. Once you master the confirmation system, and when I say master it, I'm not saying you have to be winning every trade to be considered mastering the confirmation system. I'm saying you have to know it like the back of your hand, because if you know the confirmation system, then you can recognize what an opportunity looks like, right? And the other side of that is what I did on this chart is to take the learning curve down tremendously. Is I automated the support and resistance lines and all the chart work for you. So now you don't really have to spend all weekend on every time frame drawing these support and resistance lines, and looking for all these lines, or even keeping them up to date, because the chart automatically keeps itself up to date. Even if a stock goes to all time highs, the chart updates itself with those new levels before you close it out that day. Okay.
I noticed that on Palantir.
Yeah. So it's going to automatically update itself. And so the thing that's powerful about this is that I have the chart looking back 400 candles and 400 trading days on every time frame and plotting all the historical support and resistance lines. So any previous high, all that stuff, any previous all-time highs already plotted out. Now the powerful thing about that is that the accuracy of these levels is like pinpoint accurate. And so you can see what we call A plus trades way ahead of time. So you can plan and you can see where it's going to be choppy at way ahead of time. Right. So like right here, if we look at Microsoft, we can see that you have a resistance line here, a resistance line here, a resistance line here. The thicker the lines are, the heavier the resistance. And you have this little tight range right here. You see how it looks almost like a music sheet right here. This means that it's choppy price action right here. As an option trader, we need gaps to where we can actually make some money. So if you're looking at Microsoft, so where is the best part of the trade at? The best trade is between this line and this line, because you have a $10 move that Microsoft can make very quick. And then all you have to do to verify what does it do in this range is you just look back to the left of the chart and see anytime that Microsoft is in this range, what does it do? Does it perform like it's supposed to in a reasonable amount of time? So you can see every time Microsoft breaks above 218.80, I mean 418.80, it just break retest and shoots up $10 within like 2 days or so, right? 2 or 3 days. So if you got calls, this is when you take out of the money risk, or you get in. And so if you see it holding above this level with a open and close candle, and you look for a break and retest when you enter in, this is when you go get a 420 call or a 428 call and running this range with a little time on your contracts, because you can see that every time it does this, within like a week, it's going to shoot up that $10. You see that? And when it breaks it to the downside, it drops even quicker. Within the same trading week, it's going to drop all the way down. It keeps moving this $10 very quick. And so this is when you want to take your A plus trade. And in this range, you gotta already realize, okay, if I get a breakout confirmation in this range, I gotta take a little $2-3 win. Right. So now if we zoom out, zoom back over to where we are now, Microsoft been stuck in this little range. It's been barely doing anything every day. It's been bouncing from like 409, 408, 411. It's been doing this little pathetic type of price action. But if you be patient, you can make one trade from 414 to 418. That's a decent trade that you can make some money off of. But the big trade is going to happen when it breaks above 418.80, 418.90, and holds above this level, gives you a strong candle. You need an open and close candle above that resistance line, or you need your floating candle confirmation, get an open and close candle above this range. Then it's going to shoot straight up to 428. So this is when you're doing homework like this, you want to put an alert. You can just right click right above that. And I can say every time Microsoft breaks past that level, just let me know. Send me an alert. That way I can get ready to trade this or get me some contracts to get into this range, right? So now I have alerts out on my chart that now I don't have to watch this anymore. So that's what you want to do too when you're doing trading. You want to look even on a daily time frame, 5 minute time frame, to see where are the A plus trades at for these stocks. Where do they have very little resistance where they can just break up? Like Netflix has a nice range between 408 and 432, right? We see that it broke when it broke here, broke and retested, and it shot straight up to the 430 or 432. Now it came back down. What did it do? It came back and retested its previous high. That's all it did. Bounced on this little range, came dipped under it a little bit, and now it's almost back up to 432. Right. The other advantage you have is that when I turn my wolf chart back on, because we're using these historical resistance lines for take profit and looking at A plus trades. And if I turn this back on, the other advantage we have on this chart is this ATR tracker is very powerful. So let me make this large. And I just want to point out a few things on here. Um, so if I make this large, any stock you go to, if you go to the daily time frame, it'll tell you that how many dollars this stock can move in a day. This is the average true range. So it's gonna so this everything on this chart is pretty much dynamic. The color change system, the support and resistance, and even this ATR tracker. So it's going to tell you per time frame you're on what what a candle from that time frame, what's the average true range of that candle. So it's telling you right here overall Netflix can run up $25 in a day. And you see here it went all the way down to 998. But if you look at the opening price, so the Netflix opened at $1,005, right? So it almost ran its full ATR today, right? And so it pushed up and it ran almost $25 today. So it ran about 20 or like $18 today, but it could tell you the average range of a daily candle.
So
And
that's on whatever time frame you're on. So
yep,
if you're on a 4 hour candle, that'll
yep.
tell
So
you
yep.
how
So if I
much
go,
it's. Yeah.
so if I go to the 4 hour time frame, it's going to automatically adjust itself to the 4 hour time frame. It's saying okay,
Wow.
the average range of a 4 hour candle is $15.78. And it does it. So when you're day trading, you want to see stocks, okay, what stocks really have the biggest daily range where I could, make some good money on a day trade. If they break out, you can just go through them and you can look at and find those bull type stocks like or the ones that can drop a lot. You got Tesla, you got Netflix, um, and then you want to see something that doesn't move as much, but you can still make decent money off of. You can go to something like Apple that has like I think like $8, $7 or something. I know $6, right? Now the other thing that this ATR tracker does is you always want to check your daily time frame because when something has the volatility status set to aggressive or this breakout status flips to strong momentum, whatever direction that stock is going in, that means that it's a true breakout with real volume. So you can see with Apple today, I wasn't shy on playing Apple calls or Alibaba calls, but Tesla, I said, look, Tesla can get back all of its gains today. I was reading from my ATR tracker because Apple had a volatility status of aggressive. That means that the volatility was increasing. So, in other words, the ATR was going up. The average range they can move in a day was appreciating while the stock price was going up. So that means he was getting real volume and real money pushing it up. So this thing will help you filter out false breakouts and or breakouts that can stick. Or if you're thinking, okay, can Apple keep going up? If you see the volatility status set to aggressive on a daily time frame or the breakout set to strong momentum, if this flips to strong momentum, that means that stock can go further than normal. But you see, look at Apple's candle. Buyers were pretty much in control of that whole candle, right? So if you saw Apple going up and you were like, let me jump into puts, but while it's going up, the volatility status is aggressive move. That means that you need to be playing calls on them instead of puts. And so we look at Tesla today, for example. it was going up today a lot, but it was had low volatility.